Today we're going to talk enterprise versus startups compliance, compliance for adoption, and many more. So you have custodial wallet, and wallets usually are the gateway to crypto, right? So talking about like how you make that compliant. So what you were as a compliance officer historically, and you were working for one of the biggest social apps in the world. In the Eastern Europe, okay, sorry, but one day that was a huge world to myself. Right? But tell us from that perspective, what was the initial essentials? For instance, for other wallets to know that are building the same solutions as you right now.
So maybe just to highlight that, because I'm also a lawyer by background, so we're building non-custodial infrastructure mostly, right? I think this is an important differentiator. We do have experience with custodial setups, right? One of our clients is a German regulated custodian, right? So we do understand the world of traditional, and Web3 based financial services.
Oh, but you told that this card is literally like a ledger.
Yeah,
okay.
Which is fully non-custodial.
Okay,
yeah.
Because I thought that it's a storage, right?
Well, I mean, if I may be a little bit geeky, the card, or smart card to be precise, right, has a secure element. So if you as a user receive the card, you then basically type in your own PIN code, the only you know, and then within secure enclave of the card, the private key gets generated with a true randomness generator, yada, yada, yada. So it's fully non-custodial. It stays on the card within the secure enclave.
Okay, so let's keep this part of differentiation. It's very interesting. I think I definitely would like to invite you sometime separately to discuss wallets infrastructure and why not to build the next MetaMask and why so many wallets are not successful. But let's right now go back a little bit to compliance matter, because I believe that every single chain and every single infrastructure there need wallets, right? So from the compliance perspective, what they should be aware of, because non-custodial meaning that, we are not kind of need to have it, or maybe we can do that a bit later on. So what the regulation says us and where it's going?
So, I mean, I think first it's important to have both worlds, right? I think it's important to have non-custodial wallets and give the consumers the opportunity to use them, right? On the same side, of course, there is a good place for having custodial wallets within regulated financial institutions. I think the worst, of both worlds would be having a custodial wallet with unregulated institution, right, or company. And I think that's something that we sort of should avoid. But I'm fine as long as there is sort of black and white approach, right? And I think this is something that should be followed very strictly. The same way that I think it's allowed for consumers to have some amount of cash, right? But it's also great to have banks, and banks should be regulated and supervised, et cetera, in a proper manner.
But how do you manage that? Do you have any kind of limits, that you put on, because it's non-custodial? So how do you manage that? How do you really make the checks on the what's going on in your ecosystem and your user base?
Well, I think so. First, you have to follow the laws of the
there is no law,
jurisdictions.
for instance. Okay.
Right, but again, so first you have to comply with the laws, right,
Okay.
and the existing regulation. If there is no existing regulation, then at least that's the check one. Then you can ask yourself, do you want to go further and actually do some voluntary checks, et cetera, right? For example, I think one of the major issues that a lot of regulated companies may have in the current world is whether they want to accept transactions from unhosted or non-custodial wallets to their sort of regulated part, right? And I think here's something that the game between, or collaboration between the regulated institution and the technology provider can actually work out nicely, because we can build tools that will help the regulated institution actually identify their sender, whitelist the wallet, et cetera. Exactly. So I think this dialogue is super important for the industry.
Yeah, Chris,
absolutely.
Maybe you can just share with us from your perspective, how do you do you like working with non-custodial wallets, for instance, if the institutions are saying that they're building such solution, or you would prefer to have custodial counterparties that you can really do deal somehow on your side?
I think our main objective is really to provide as much flexibility to our clients as possible, and the clients really demand, whether they're institutional or retail, they do demand that option to be able to transfer funds to and from non-custodial environments. And so we've been able to adapt over time. Actually, Switzerland is one of the jurisdictions that's been the most aggressive in implementing regulations for custodial and non-custodial wallets, in both of them. And we've implemented that into our processes, so we have been FINMA compliant with regards to transfers to and from a regulated environment to a non-custodial wallet, or between two regulated environments, for since 2019 actually.
I want to discuss with the zero knowledge as well technology, but like maybe let's give it as a cherry on the pie. And talking about like enterprise, so like we understand that from the startup perspective, we have completely different procedures, or we can say that we're trying to benchmark ourselves for the policies, but we can complicate or not to overcomplicate, right? So we can have the minimum or the full pack, depending on who we're like, what we're doing and when and why. So I just like wanted a bit to empower like all the DeFi and let's say like wallets infrastructure players that are building their solutions right now, because we have audience from entrepreneurs, right, that are not, they don't have this expertise. So Victor, maybe you can just give some tips. You already said the top, like go and read, but if we go more concrete, so what is important and how to protect your business that might be a next unicorn in the next 3 years from the day one?
So I think, like, first it's important to remember that the laws apply, to startups and corporates, right? That it doesn't really differentiate on the size, right, of the company in most cases, right? Of course, in compliance there is something that we call the risk-based approach, right? And if there is a sort of systemic risk to the financial industry or to the market, et cetera, then some additional regulations or laws can apply to sort of bigger companies, like in payment space in Switzerland, for example. But overall, I would highly sort of, encourage every Web3 entrepreneur to at least have a understanding of what regulations apply to his company. Right, I think this is one of the areas that you definitely should invest your time and resources into, and again.
And when this phase is starting, when you're trying to open your banking account, right? And the bank is asking, do you have a compliance manual by the chance? And then like entrepreneur, like, what? Manual compliance? Seriously? I'm building that free decentralized world, right?
Yes, I think that's a fallacy actually in the decentralized world, that just because you can brand yourself as decentralized and use a smart contract to custody assets, that you don't necessarily have a central counterparty. But the Financial Action Task Force, which is the global body that oversees anti-money laundering, has been more and more clear on what constitutes or what should constitute in the member states centralized versus decentralized services. And they've given a lot of feedback to the community and to the member states on how to build that into their national regulations. So I think that's trickling down now, and we're seeing the effects in updates and regulations on centralized versus decentralized exchanges.
Chris, thank you very much for sharing this. So like from one side we have a representative from infrastructure wallet as a gateway. From the other side, you're providing the services for TradFi institutional grade level people. So compliance leads to adoption, and the infrastructure leads to usability. So what products and services right now like are most used from TradFi perspective in Web3?
I think some of the sort of larger institutional players are really looking for infrastructures that have a high degree of security, that are in jurisdictions that are highly regulated. Innovation is still sought after. Everybody is certainly looking for new products and services, but I think people are more and more, or the larger players are more and more gravitating to reducing their systemic risk and investing in jurisdictions where they have a qualified workforce, a political system that supports innovation, and clear regulations to give certainty.
So, and you're based in Switzerland and Spain, but like, what other jurisdictions do you like from the crypto regulation perspective? Because like you've seen this PVC or all others like before others like the reports on the compliance and regulations, but like nobody reads it. And like, to be honest, they start reading it only when they feel very big danger. But like talking about the jurisdictions, so what countries do you think that are like first movers and like doing great job from your perspective?
So just purely from a compliance perspective?
No, not only from compliance, not compliance, sorry. So on the crypto regulation perspective, definitely.
So from a regulatory perspective, I would think some of the first movers who are very aggressive in coming out with either guidance or amending their legislation include Malta, Singapore, Switzerland.
So that is your favorite one, right?
Yeah, the EU to a certain extent. Definitely, I mean, Switzerland, the Federal Council came out already in 2018 with very clear guidance on how they would interpret eventually changes to the regulation just to really foster innovation. I think that really set the tone for the development of the crypto valley.
Yeah, and it was actually a very well written document. So actually, some people do read it, indeed. So when I went through it, I was really amazed by the quality.
Just because you ex-compliance officer.
Well, maybe I like to read. Yeah, but
it touches on taxation and a bunch of
I love it
topics
too. Like I love it. I think like it's the must, in the reading book.
I think maybe if I can add something like more from. Sort of from my personal experience, right? So I definitely agree with you on Switzerland. I would also highlight Liechtenstein. That was fairly early on, right? What is crucial from my experience, legislation is not enough or regulation is not enough. You also have to have a dialogue with the regulator, because with the best regulation you put out there is still sort of, a moving process. So, and I think, this is something that Switzerland does really well. So you can approach the regulator as a industry participant. You can have a clarity through no legal no objection letter, et cetera, et cetera. This is something that is fairly unique and definitely highly acknowledged by startups or probably even large corporates as well.
I have a question to you, which is very, very important from the perspective of like technology building and the regulation building. So sometimes like it's really not really aligned in terms of timing, right? So we have already technology ready here and now, and then regulation starting to understand this for technology first, and then to like, you already told that like there is some working groups, you have to talk to regulator, like other builders don't understand what does it mean talking to the regulator, right? So, but like from the perspective of new innovation that are coming, how to secure yourself from not being, under risk once you build it, when the regulation is not still there. Like we discussed liquid staking, for instance, or staking services.
I mean, definitely on the SDX side, we've been working in lockstep with our regulator. We definitely have we take every opportunity to discuss with them innovations that we are planning to develop. Even before we get to the MVP stage, we have that communication with them, so we are able to move forward with significant investments with a certain degree of confidence that it'll be well received and compliant with the regulatory framework. But
I fully agree. At the very end, there are also like human beings behind the regulator, right? So you have to approach them, you have to speak with them. They will be specifically in jurisdictions like Switzerland, Liechtenstein, a few others as well, Singapore. You actually have people who do understand the matter subjects fairly well, right? And I think that also gives them some regulatory advantage in terms of other jurisdictions. So yes, I would also encourage everyone to work with a regulator.
It's Switzerland, okay. You kind of giving the benchmark for the crypto industry, but talking about the global markets, could you guys elaborate on the wider scope?
Sure. Yeah. I just came from Abu Dhabi, right? I think something that ADGM is building, the DLT Foundation framework is fairly interesting because it's tailor-made to the DLT foundations. I think they've been pretty innovative in the space and also very, stringent to offering guidance and regulation to the space. In Singapore, we mentioned maybe something from your experience where you would highlight.
Yeah, I would say that KYC AML has really helped the industry be able to prevent and detect definitely any attempts to misuse crypto for money laundering or sanction circumvention. But I think a big part of the work is on the educational front as well. I think media tend to hang on to headlines that are salacious, that can paint crypto in a negative light, and I think we need to be very proactive in making sure that regulators have the true story, that they have the facts. There's a lot of data out there. It is pseudonymous, And so we can do a lot of mining of correct information and make sure that the narrative reflects the truth, that actually Bitcoin is used or cryptocurrency tokenization has a lot of potential and should not be blacklisted just because of a couple of salacious stories.
Thank you so much, Chris. So know your user or don't know your user. What do you think?
So, I mean, as two of us have legal background, we always say it depends, right?
Yeah.
But I think it highly depends on the use case. There are also other aspects that come in place, GDPR or data protection, et cetera, et cetera. So, but I think it's definitely helpful to know your user and to be able to assess the risk either from a compliance or, let's say, overall risk management perspective.
Chris, what do you think?
I would add to that, in the past there have been need to have alternatives to identifying people, especially in countries where there is no identification. These are the people who need access to alternative finances the most, but there's so many great innovations in terms of digital identification that there's ways to bring in identification components, reduce the risk, and still loop in the segments of community that don't have access to financial services.
Thank you so much. Thank you so much for this conversation. That was my pleasure meeting you.
Thanks for having us.
I believe that having you it was a big pleasure. And today we was on Albus Talks on Dukascoin TV, and we were talking about compliance, use cases, and many more with startup enterprise in one place. See you around.